Good morning, investors. Happy Friday. It's the weekend. I'm excited to be here. Obviously, it's the weekend, so nobody could be upset at that. But welcome everybody to the Real Estate Investor News Channel. This is your host Tony Moreno. If you're new here, what we do, we go over the top 3 stories in real estate. Whether if you're a new investor, a seasoned investor, or you're just looking to get into the real estate market, into real estate investing, this is the place for you where you hear your top real estate stories. My name is Tony Moreno. And then if you don't know about me, I own about 20 doors, 20 units, I guess you could say. And that's mostly in single family and mobile home parks. But again, let's get right into it. Today's first story, we got rental markets show signs of life with March uptick. So you guys know we've been struggling trying, with rent in some markets, not all of them, but this is a good sign for investors because finally we get to see a little bit of rent uptick. For our second story, we got Consumer Group predicts 20 to 30% drop in commissions, and this is for agents. So this is good news for home buyers, bad news for agents. But I think it's, in my personal opinion, I think it's good overall because it will increase competition within the agents, which would weed out the bad agents, which were there were a lot created in the last 3 years. So that's our second story. And for our third story, we got Blackstone, one of the largest asset managers in the U.S. and in the world, I think, buys apartment real estate investment trust, betting 10 billion on multifamily. Now, this is a big topic because I know not multifamily, commercial real estate has been getting, hit hard. But I think multifamily is completely different from that. And Blackstone sees that. And I like to go over this article because I always like to see what the big guys are doing. These are people that have a lot of money to look into markets and look into real estate. And when they do something, everybody has their eyes on them because of that. So let's go over the first story. We got rental market shows signs of life with March uptick. So let's see. It says here, this is an article by Commercial Real Estate Daily. Despite yearly downtrend, rental market shows signs of life with March uptick. The April 2024 Apartment List National Rent Report shows the rental market rebounding with a national median rent rising to 1,388 after a 0.6% increase in March, signaling the end of a 6-month slump. So in the last 6 months, rent has been going down statewide, not in every city, of course, but this is a good sign that for investors, since rent finally can pick back up. And again, this is because inflation was higher than usual, still higher than usual, which we'll talk about in a second. But uh, uh, this is good news for investors. It says here the supply side tells the story of increasing vacancies with a national index of 6.7%. With 2024 poised to see a surge in new apartment completions, the market braces for an abundance of options, potentially pushing vacancies even higher. So this is interesting because we know, at least I mentioned this earlier this week, where I'm from in Huntsville, there's a lot of apartment buildings being built. In 2024, a lot of those apartments will be completed, which is going to be a lot of options, a lot of apartments, empty units, which is going to increase the vacancy. And you can see that actually in this chart here. You see in October 2021, it was 3.9%, which is great. And then obviously, beginning second quarter of 2024, we're at 6.7%. And that might increase once these big apartment buildings are completed. So we'll see how that plays out. It says here, the slowdown in the rental market is now influencing the U.S. inflation. And that's just because we know in commercial real estate, these loans are now coming due. So a lot of these apartment buildings, big developers, their interest rates are going to increase because it's a 5-year, balloon for them. So rents might go up even more. It might increase vacancy. So we'll see. It says here, according to this chart here, you see that CPI is obviously, this is the red line, the top line CPI is 3.2%, where the Fed shoots for 2%. And then CPI on just rent alone is a 5.8%. I assume this is year over year. I think it is. So it's still, the rent is increasing. And then you see the not rent, I'm sorry, the the rent of primary residence. And then you see apartments went down, is at negative 0.8%, but that might go up little by little. So here's the Sun Belt, also known for its quick expansion. And I'm not sure which area is the Sun Belt. Somebody comment below the area of Sun Belt. I think it's California, but I'm not sure. But it says it's known for its quick expansion. This is witnessing notable rent declines, especially in Austin, Atlanta, and Nashville. Maybe the Sun maybe Sun Belt is not it's not a city. It's actually multiple cities, apparently, where an influx of multifamily units is cooling the market. So again, a lot of people are building commercial real estate right now, especially in these cities that you see here. So obviously they're looking at cooling cooling markets there. So that's that story. For our second story, we got Consumer Group predicts 20 to 30% drop in commission. So it reads here, a new report from the Consumer Federation of America suggests that the outcome of last month's proposed settlement from NAR, which is the National Association of Realtors, and ongoing class action litigation surround agent commission will ultimately benefit both the buyer and the seller. So for those that don't know, the big lawsuit that was going on maybe like a month ago is going to allow people to actually negotiate the commission with the realtor. I think this is a good thing for buyers and sellers, obviously, and for us investors, because we can actually negotiate with our agent. And, if you have a great agent, you can leave the 3% that they make. There's no problem with that. I think the good news here is that this settlement is going to weed out a lot of the horrible agents, because they're not going to get any deals, and then eventually they'll go back to probably their previous line of work. So what this is going to do is going to increase competition, which I think is great. And the good agents are going to fight for their commission. They're going to actually do work for their commission. Because honestly, I'm not going to lie, I don't use agents that much, because Zillow gives you notifications when a property is listed, and that's usually before. That's what agents used to do. So really, we need agents, I would say, to step it up a little bit. That's just my personal opinion. Nothing against any agent, but yeah, that's just my personal opinion. It says here, decoupling sellers and buyers agent commission by eliminating mandatory offers of compensation will give consumers more negotiating power. This will result in better service and lower cost on home purchases, leading to a real estate marketplace that will also be more rational and fairer, which is what we just discussed. For several years, the Consumer Federation of America has estimated the potential consumer savings at 20 to 30%. That is insane. That means the savings will be 20 to 30%. That's what we used to pay, especially sellers used to pay the commission for the agents. Now it's going to be negotiated with buyers and sellers. The report noting that outside experts have concluded commissions could decline by 20 to 50% in a more competitive market, lowering home ownership costs by tens of billions of dollars annually. So that is crazy. That is, again, it's something that's going to shape the future of real estate for us investors, new time home buyers, or really just anybody looking to buy real estate, period. So we'll see how that plays out. For our last story, we got Blackstone buys apartment real estate investment trust betting $10 billion on multifamily. Now, this is shocking because a lot of people are running from commercial real estate. But again, I mentioned earlier this week that multifamily is a whole different aspect of commercial real estate, because in commercial real estate you got office space, you got mobile home parks, you got a whole bunch of other little classes, but multifamily is a whole different beast because demand is still high for living. So Blackstone, which is a one of the biggest, I can't remember where they're one of the biggest, I will have to look it up, but they're one of the biggest fund managers in the US, and they just bought $10 billion of multifamily. It says here, Blackstone's largest in the multifamily sector, encompasses 76 upscale rental housing communities in sought after coastal markets like Miami, LA, and Boston. Now, of course, these are markets that most likely will increase with rents and prices. We've seen the big demand in Florida. That's, everybody knows that. LA, California is decreasing. Maybe they're looking at opportunities to where they can add value to the units, and they just see their values of their assets increase. And Boston, I'm not sure in Boston. That one was new to me. I have to look into Boston to see what's going on there. It says here Blackstone is planning to take the private apartment income REIT and inject another 400 million to maintain and enhance the portfolio. And if you don't know, commercial real estate is valued on, it's a commercial asset, so it's based on the net operating income. So obviously they have to put nicer things into these apartments in order to, number one, increase the rents and increase the demand. So that's what Blackstone aims to do. um, ARR communities represent the highest quality large scale apartment portfolio we have ever acquired. This is, Blackstone speaking, and it's located in markets where multifamily fundamentals are strong. And again, these guys do their research. So this is something huge, because when somebody this big does something like this, us small investors, that's what we can look, and we can use that to base our decisions. But at the bottom of the list, do your own great due diligence, but this also plays a big factor. It says here the commercial real estate market is in its deepest slump since the 2008-2009 crisis, with high borrowing costs driving down values. Office vacancies are at an all-time high due to increased workplace flexibility. This is, a lot of people are allowed to work from home, so office vacancies are increasing because of this. So that's one of the areas of commercial real estate that is increasing, that is losing its value because of that. So the takeaway: Blackstone believes real estate values have bottomed out. So if you are a new investor listening to this, this may be an opportunity. And again, do your due diligence. And again, I'm gonna repeat that, looking straight at the camera. Do Yeah, I'm gonna grab the mic just like this. Yes, do your due diligence when it comes to this. Do not just base it off of this article. Everything that's discussed here is informational, for informational purposes only. So do your own research. But again, Blackstone believes that real estate have bottomed out. So this could be an opportunity for the trend to continue to go back up. So it may be a good time to buy now. It says here the firm's multifamily investment strategy is part of a broader real estate investment focus, emphasizing sectors like rental housing, data centers, like logistics, hospitality, and student housing. So again, I'm going to share the link to this link in the bottom notes if you want to read the whole thing for yourself. If you like what you saw today, please consider subscribing, following us, follow me on social media below, and follow the Instagram page, which is RE_investor news. RE_investor news. Hit that like button if you like what you see. Thank you guys so much, and have an amazing, amazing weekend. God bless you.